Welcome to Animal Spirits with Michael and Ben. Ben, I had a realization on Thursday when I was recording with Shannon and Todd. Now, maybe this is because I'm doing 3 podcasts a week talking about the markets, but I think it has more to do with the market itself and certainly a lack of news. Like, the market's been fairly boring this summer, right? It's been like a slow, steady grind higher.
People are trying to make stuff stick, but it's not. No, there's nothing happening.
There's nothing happening. So largely a function of that, but also of the market itself. All right, what am I talking about? I'm blabbering. Say it already. Speak. I feel like we've been saying the same shit for a long time. And I'm getting bored, and I suspect the listeners might be getting bored. I don't know what to tell you, but I kind of wish that we could fast forward and just like check back in 3 years. Like, we just take like a 3-year hiatus, come back and just see what happened. And in particular, I'm talking mostly about the stock market, because we know it's all riding on AI. Is it going to deliver? Is it going to disappoint? How much? And then, of course, there's the real estate thing, which we've been talking about. It's just same fucking stories every freaking week.
So I had, not to like take a victory lap here, but someone tagged me in an old tweet of mine from 2021. And I said, people keep calling for a housing market crash or a housing market bubble. And I feel like in 5 or 10 years, they're still going to be saying that same thing. And that was my take back then. And it sure does. That is the stock market too. That you're right. We've been having this discussion every year for 7 or 8 years now. And so,
but
you
it's
just
really, but it's like, I feel like it's just relentless. It's so much more than it ever has been, because what else is there to talk about? NVIDIA is $4 trillion. On Thursday, we were talking with Todd, and he has this great chart showing NVIDIA and Microsoft together are about to be worth more than all the healthcare stocks, all the utilities, all the staples, and all the energy stocks. And it's like, all right, get on with it already. What, I want to see what happens. I want to see the resolution to this.
Are you just hoping for a new cycle? I'm
not hoping for anything. I just, until something happens, and I don't know what I'm waiting for. It just, and I certainly, listen, I definitely don't want to be the guy who is telling people to relax and sober up. I don't want to be like the dude at the party who's like, bro, you're really drunk. Like, maybe slow down, stop drinking. Like, I don't want to be that guy. It's annoying.
Don't be we had a guy in college who used to always say, hey, have you guys ever thought of drinking in moderation before?
Yeah, like, no, shut up, dork.
Okay, so.
But I also do feel like this is, and I don't know why I'm just sort of feeling these feelings, but that whole like new generation of investors, I feel like I'm only first now. Like, yeah, this really is a new generation of investors. And I'm not saying that like this is going to end badly and wagging my finger at them. But there's a lot of shit.
Sam Altman got quoted in a story last week, and he said, when bubbles happen, smart people get overexcited about a kernel of truth. Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes. I feel like, though, this is the kind of thing that he has to say. Because people now, one of the things that I feel for young people on is the fact that they have camera phones and videos in their faces all the time. And they probably have to act a certain way because they're worried people are going to videotape them or something, right? Or put them on something, call them out. And so I feel like the same thing with CEOs sometimes, where they know the stuff that they have to say so they don't look like an idiot in the future. So of course he has to say that, but I don't know. What does he really believe?
He doesn't have to say anything. I mean,
he doesn't.
Look what Elon says on his conference calls. Listen to what Alex Karp says on his conference calls.
But no one wants to be a cheerleader in a .com bubble, like, and have it thrown in their face like Henry Blodgett every year for the rest of their career. Right? Like, you were cheering the .com bubble, but secretly you were. Nobody
wants to. I just told you, Elon and Karp, and they're not. I mean, I'm sure we could think of a lot of others that are very much galvanizing their shareholder base.
Okay, but what do you think about his statements though? Like that has to be the baseline opinion right now.
Oh yeah. To me, that's very fair. And I read a Howard Marks memo, which it's been a minute since I read one of those. But it was great, as they always are. Like, what do you? So what? Right? Like, we know none of these talking points are new insights.
Let's get it over. But the weird thing is though that like there might not be a get over it thing because some of these stocks could crash, but then AI still could transform the world, and then you get like a little bit of both.
I think
Everyone wins.
The most hilarious outcome would be if we do get a crash. Wouldn't be hilarious, but if we do get like maybe a lost 5 years for Nvidia, which seems fairly reasonable at $4 trillion, maybe we can go to 10. Why not? But if we do actually get the efficiency gains and the productivity gains in the rest of the world, and margins of the market go from 11 to 13 to 16 to 17, and it's just a baton handing off to the 493.
Right.
Not inconceivable. Anyway, the reason why I brought up Howard Marks is he did this whole thing and he's like, all right, well, so what? Like, what do you do? What's the conclusion here? And he had like 5 things that you could do, all the way from get defensive to short the market. And he's like, this seems sensible. This seems ridiculous. Like, do not short a bull market ever. If we're using the .com analog, because it's just, it's easy. What if this is 1996? Who's to say?
So the New York Times had a story, and the headline is scarier than the actual meat of the article, which is typically true. I written for a couple of financial publications, Bloomberg and Fortune. And if you were a writer, I would always give them an idea what I want the headline to be, and they would never take it, of course. Like they always make up, but it says the stock market is getting scary. Here's what you should do. It's Burton Malkiel, actually. Still going strong. We interviewed him a couple years ago, and he's in his 90s, I think. Right? He's been going strong for a while, but he was like, listen, the valuations seem high. Everyone's getting overly excited. What do you do? He's like, I don't know. Can you time the market? No. So
maybe just relax and just,
yeah.
That's my default.
You asked about the most hilarious outcome. I still think the most hilarious outcome is we create AGI, right? And we create this super computer being that's smarter than all of us. And it just, like her, it just says, I don't want you guys anymore. Scram. I'm keeping it all to myself. Leave me alone. And then we're stuck with nothing.
Yeah,
how's that?
Yeah, no.
Okay, let's talk about the actual stock market. What did you put in here? You can't fake revenue. So you put out a take, I think, to me and Josh on Slack a couple weeks ago or last week, and people were saying like, why is the stock market going up? And what was you gave like 4 bullet points about, okay, tariff uncertainty is behind us, earnings are coming in strong, inflation is okay, and the Fed's about to cut. Like if you just looked at it through that lens, this is why the stock market is still booming.
Yeah, that's the case I made on Thursday. What do you if you just knew that, what would you expect the stock market to do?
Right.
You think we'd be in a bear market? Why? Because there's some shenanigans going on? Because there's some things that you don't like that are happening? And in particularly, we are in earnings season. And also, I should not that everybody doesn't necessarily know this. It's not as if the stock market is going straight up. It's not like we're going up. I mean, yes, we're sort of going nowhere fast.
It feels like it though.
I mean, like we are at all-time highs, but it's not, and yes, we have had a ridiculous move off of the April lows. But in recent weeks, we're going sideways. We're at all-time highs, but we're going sideways. So I don't want to like be all hysterical, like, oh, we're going straight up. We're not going straight up. But we are in earnings season. We're wrapping it up. And people got too bearish. People were way off sides. Analysts in particular. And not just them, everyone really. All right, so Kevin Gordon tweeted, for the second quarter, S&P 500 earning beat rates above 80%. Revenue beat rate right under 80%. And the earnings beat rate, the band, like the range is not that wide because earnings are fairly predictable quarter to quarter, right? Not like that much. You don't get shocked quarter to quarter on the earnings, but revenue could be all over the place. And you can't fake revenue. And companies smashed revenue expectations.
You also can't fake cash flows. So this is from the Wall Street Journal. American companies are buying their own stocks at a record pace. Buybacks are expected to top $1.1 trillion in 2025. So let's see. That's the highest on record, obviously. And they show completed and announced. And it's funny, a lot of times you think these CEOs, like they can backtrack on buybacks if they want. Like dividends, when they say they're going to just pay a dividend, they pay it. But the actual like announced versus completed is closer than you think. Like companies, this is part of their thing now. And they show the largest buybacks, and Apple is the biggest one at 100 billion. JP Morgan's up there. It's all the biggest names. But this is from Sherwood. This is really interesting. Apple has bought back billions of shares in the last 12 years. Their shares outstanding have dropped 44% since the mid 2010s. It's kind of nuts. But it also tells you how mature of a company that they are. And so I wonder how many people would say, okay, great, maybe use that money to buy some AI company instead. Like, it's time to do a deal. You've been paper bearish on Apple for a while.
Yeah.
Okay, good one from Exhibit A, chart of the week. S&P 500 versus the 493 versus the Mag 7 in 2025. It is kind of crazy that the market's up 10% this year, essentially. So we're on track for another 20% year. Right? The average up year.
On track for.
We are. It's up 10%. But
you're not on track for anything. We have several months left.
When the stock market is up in a given year, it's up an average of 21%. When it's down an average of 13%. History says we're likely to see an up 20% year again. Where we are.
Could be.
Who knows? But this is kind of crazy that the Mag 7 was getting smoked through April and now is outperforming again. It was down 25%-ish.
This has been wild. This has been a hell of a year. I also feel like, just getting back to the comments I made earlier, like this post-COVID world that we're living in, does it still feel like a dream to you? It doesn't feel like real life. I feel like I'm still.
Yeah, there are definitely parts of it that are. The information age totally screws up your perception of reality, I think. I have a take later about how screwed up we are. I'll save it. This is interesting though. Josh was talking about this yesterday, and I had to look it up. From the bottom, I looked at the Russell 2000, VTI, which is the total market, and then the EFA to see how markets have performed since the bottom in April, right before that big like up 10% day or whatever. And all the gains are essentially the same. They're all up 27, 28%-ish and follow each other pretty darn closely. International stocks, small caps, and the Russell 3000. And that's why these like exogenous events are so weird. Just like COVID and just like Liberation Day, that everything just kind of goes down and then everything comes back up. And it's almost like the yield curve never shifts 1-to-1. Like the different parts of the yield curve move differently. But with a stock market, when you have these types of event-led crashes, they tend to like fall and rise at the same magnitude. It's bizarre.
Yeah.
It's just like it was a total re-rating, and then that re-rating got unrated, I guess you could say.
Yeah.
All right. So another one from Exhibit A. Remember, check out exhibita.com for advisors. Did you do your webinar yet?
No, it's exhibitaforadvice.com.
What did I say?
Exhibita.com.
Okay.
Exhibitaforadvice.com. Yeah, we did. We did the webinars. Went great.
Okay. So this one is good because I've seen for years people talking about small caps are dead. Amazon went public at $400 million, and that doesn't happen anymore. Companies staying private longer. Small caps are dead. And this chart shows the cycles of small and large cap outperformance. Now, sometimes these things totally flip, but I don't think looking at this chart would lead you to believe, yeah, it's over. Small caps are dead.
I don't believe that.
I still think, like, look at how long the cycle of outperformance was for small caps. It was a very long time following the dot-com bubble.
I do think, though, is it more brave to say that this is permanent? I feel like it's easy to say, like, yeah, diversification still works.
I don't know. I don't think it's brave to use recency bias.
Fair.
I think recency bias is way easier than like going against the herd now. It was easy to be a contrarian coming out of 2008. It is not easy to be a contrarian right now. Don't you think? If you've been a contrarian for a long time, you've been proven wrong over and over and over again.
Yeah, that's a really good point. There have been contrarian trades that have worked great over the years in narrow windows. Maybe solar stocks are having a moment right now. Maybe weed stocks are having a moment right now, where these things that have just been absolutely left for dead, they could have a year run, a 2-year run. But this thing where everybody was wrong about the big themes in the market, is that a thing of the past? That seems ridiculous, right? Because maybe, actually, I mean, oh my God, Michael, hello. We were just talking about AI. That is the biggest thing in the market. Maybe everybody's wrong about that, or maybe they're not. No, maybe NVIDIA goes to 10 trillion.
You're right. There's so many opinions now. It's hard to find something that someone is on every corner now.
Yeah.
Where in the past that might not have been the case. Um, okay, so last week I talked about healthcare stocks, and I said, are they cheap or are they the next energy? And then Michael Semblis from JP Morgan did a huge report, 30-page report on what's going on with healthcare stocks, which I thought was interesting. So he shows from essentially 1990 through COVID, healthcare stocks performed identically with technology stocks. They had the same exact returns, except healthcare stocks had way less volatility. So in the 80s, 90s, and 2000s, all the way through 2020, you would have been better off on a risk-adjusted return going with healthcare than technology, which is kind of crazy to think about. And ever since then, technology has destroyed, and healthcare has essentially almost gone nowhere this decade. He's showing the valuations are dropping. He went through all this stuff in the report about why this is happening. A lot of it is regulation and drug prices. But his bottom line is like this sector is pricing in a lot of bad news. So that's your point about like, are you going to take Nvidia and Microsoft for the next 10 years, or like, what are those sectors? Healthcare and utilities and
I mean,
energy or whatever?
It doesn't have to be either or, but for the sake of this exercise, yeah, I'd rather own healthcare.
Yeah, but I'm saying, yeah, if you're going to take that contrarian bet and you're still going to be a contrarian, it's funny. It doesn't seem like there are as many contrarians out there as there used to be, or at least there's not as many contrarians pounding the table. I feel like because they've touched the hot stove so many times, you can't really pound the table anymore.
Yeah. So things are very different today. Like market structure is very different. Risk appetite, which risk appetite is not permanent because that could disappear in a second. But certainly this muscle memory of this generation of investors, it's not going to break with the bear market, like a 2-year bear market. It would have to take something catastrophic.
The thing is, the .com bubble didn't really break people's risk appetite. They held onto their stocks pretty good. It was the .com bubble, and then 6 years later, the Great Financial Crisis. That's what finally broke people. It was 50% crashes.
Right.
So you're right. Even a big washout, a 30% bear market or something,
which we just had in the first quarter.
Yeah, I don't think that's going to cause people to like all of a sudden give up.
Neither do I. So anyway, there's a chart from Goldman that shows retail flows as a percent of aggregate market cap. And this chart it's a 1-year chart. And look how much technology stocks they're buying. So it compares the NASDAQ 100 versus the S&P 500, and retail flows as a percent of aggregate market cap. And it's 0.25%, which might sound small, but when you consider how many billions and billions and billions of dollars it is.
But it's up 5 times this year from what it was. That's pretty crazy. It's the magnitude of the move, not the relative.
No. It's 5xing the S&P 500. Is that what you mean? Because it's starting at 0.
Right, but it was 5 basis points of market cap, and now it's 25.
But the index starts at 0. It's a 1-year period. So it's showing that in the last year, they've bought 0.25% of the entire market cap of the NASDAQ 100.
Yeah, I get it.
Yeah.
It's a crazy chart. Yes.
And so like this, the amount of money in the system, I guess you could quantify that. It's so different. It's so different than in the past.
I got some charts too about the money in the system later. Last week we talked about the K-shaped economy. And this is interesting because there was a few people who tweeted, fast food companies were one of the ones that had finally some revenue slowdown. I think it was Chipotle. It was a lot of the fast food, but then Bespoke did this chart where they looked at fast food versus sit-down restaurants. And fast food is seeing a big drop-off. Sit-down restaurants saw a huge uptick in sales growth. So this is the K-shaped thing too, where people are cutting back on fast food, but more people are buying at sit-down restaurants. Does that make sense?
I don't know why that would be the case. So there's a quote.
Because this is people who can afford to go out are still spending money, and other people who can't are cutting. This is the same thing last week with the top 20% are still spending way more, and the bottom 20 or 40% are cutting back.
All right, so let's read this quote and then let's talk about it. This is from the transcript. a quote from the Middle B. What's the Middle B? It's a company. I don't know.
Oh,
All right. Anyway, you know what? Let me look this up. What is this company? MIDD is the ticker. What do they do? The Middleby engages in the design and wine charts in the design, manufacture, marketing, and distribution of food service equipment. Okay, so there you go. All right, so they would know. All right, number one, really, all this year, traffic through the QSR segment has been down predominantly pretty much the entire year. They've been down in some cases double digits over prior year periods. I think just continued cost pressures that the QSRs are facing, whether it's labor, whether it's food, construction of opening new locations. And then you have the backdrop of uncertainty from tariffs. So I don't know how
QSR is quick service restaurant,
yeah,
like
I don't know how
fast
that's
food.
I don't know how that's so much different than like the other ones. So this from Bespoke, the ones that are growing are Kava, Burger King, Shake Shack, Chipotle, McDonald's, Potbelly, Domino's, Noodles & Co, Taco Bell, Dutch
Well, look at the
Bros.
one on the right. It's Olive Garden and Longhorn and Texas Roadhouse and Applebee's. Those ones are seeing strong growth. But yeah, the trade down. So the
Oh,
point
my
is
bad,
that,
my bad, my bad.
yeah,
The ones that I just read are the ones that are in the QSR that are growing.
yes.
So, all right. Jeez. All right. I apologize. So this chart is showing that there's way more companies in that segment, not the ones that I just mentioned, that are shrinking in sales versus the sit-down restaurants.
Yes.
But to me, is this also like an office city thing?
Yeah, I'm sure that you could say this is one quarter. Let's see if there's a trend. I thought it is kind of interesting in the
Why is Olive Garden scorching hot?
free breadsticks. You know, their salads are overrated there though. At Olive Garden, the dressing's too runny.
Okay. I haven't been to an Olive Garden in a long time.
Yeah,
There's
I
only
haven't
one
either.
around us.
All right. So one of the things that I've been thinking about with this K-shaped stuff is like how much of this is just a normalization of like catch up. Because Bank of America has this chart that shows a growing gap between higher and lower income households. And this is just wage growth. But it was so much higher for the lower end. You can't expect to see the lower end outperform and have that wages go up that much because the jump was so high. So even a smaller year over year increase on a larger base is going to be good for that cohort, right? So a lot of this, I think, is normalization. The Wall Street Journal had a bunch of good charts on it. They just show the top and bottom quartile of wage earners and wage growth. And again, I think this is the one, this next one. It's the information sector, which is technology, and then leisure and hospitality. Leisure and hospitality in 2021 or 2022 was growing at 14% on a year-over-year basis. So they got that huge bump up. So now, even though they're only growing at 3 and change now, on top of that 14%, those are good wages,
Yeah.
right? So I think this is just some sort of normalization. It's like the compounding thing,
Yeah.
right? You're compounding on a bigger base. So I think a lot of this is just things normalizing.
Yeah. All right. Tariffs appear to be a non-story, but it might be early. So says Goldman Sachs. They have a chart showing that our preliminary estimates suggest that more than half of tariff costs have been absorbed by U.S. businesses so far. But this share may decline to 8% over the next several months as consumers and foreign exporters gradually absorb more of the cost.
This is really surprising to me. So 2/3 of the cost of tariffs have been eaten by the businesses themselves, which I wouldn't have guessed at all.
Me either.
You wonder if they just decided to do that and not rock the boat because they've already raised prices enough and like, okay, let's see how this stuff actually shakes out. And there's going to be a lot of companies that get their deals and they don't have them, and like, so let's not raise prices and get crazy until we know exactly what this looks like. But obviously now that they know what they look like, then it'll be like, okay, fine. So the point is that like consumers should expect prices to rise from here. That I don't know. That kind of makes sense to me. Unless we get more. Here's the thing that I don't get. When they calculate these tariff rates, but then you have Nvidia getting a carve out and Apple getting a carve out because they go to the king and they give them a gold plated watch or whatever. How do those factor into the overall rates? This is like, how do you factor in those carve outs because there's a lot of companies who are just skirting around them.
I don't know
somehow.
how all this gets measured.
Okay. And obviously that's part of the reason that the stock market doesn't care as much. Because guess what? If Nvidia and Apple and Microsoft aren't going to be subject to these tariffs because they say they're going to invest more in the US, then why should we care?
Mm.
Right? All right. This email we got stinks. And it was kind of painful to read. I appreciate the person for sending it. You read this one?
Mm-hmm.
All right. I was hired in February of this year, and before I joined, there was just 6 people at the firm. They brought me on as their first analyst hire, and they're trying to institutionalize the equity research side of the business and remove the advisors from needing to place trades. I was the only analyst on a team of 5 advisors. Today, one of the owners brought me into a meeting. We were discussing my role, given I was hired 6 months ago. They said that while nothing was wrong with my work or performance, they can't justify paying me when AI can do everything I can do much, much faster. The thing is, they didn't say anything about AI explicitly. They kept saying that with new tools that are available, advisors are able to do a lot more with less, essentially. I feel bad. He says, I'm disappointed to listen to you guys and others. I was all too aware this could happen. I've been mentally preparing for this eventuality. I never thought it would come so quick. That stinks. And like, what do you, is it possible that these companies will realize that they're making errors by doing this? Or do you think that this is just, nope, there's no going back?
Yeah, this was a real shitty email. I don't want to be like a downer because, people are listening to us for entertainment, for fun. They could be doing anything else. But I also don't want to pretend like this isn't scary.
Right. That was my first that was my first read of this. This is kind of scary stuff.
Yeah. Now,
who knows what the extenuating and he said, like, listen, maybe there was something wrong with my performance. They didn't want to get into it, blah, 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 blah. But the way that this email is presented makes it seem like AI stole this guy's job.
Yeah. But I really and truly am optimistic about like our ability to adapt and our resiliency as people and as Americans. Like we figure shit out. We get things done. So I think that the economy will evolve and there will be more of this, unfortunately. But I think, there will be other jobs created. Not that helps this person. But like this, I can't go to the place where like AI is going to take all your jobs. I don't think it's productive. I don't think it's healthy. I don't think it's helpful.
Yeah.
I think that's like hysterical thinking. And but like the entry level jobs that's the one area that I'll hone in on. That does worry me.
Yeah.
Like
I agree. And you've kind of been harping on this for a while, that like, what if the AI is going to replace the entry level CFA essentially? And a lot of people have said like it kind of is for
paraplanner, paralegal, all of the grunt work jobs. Don't do any of that. That's all going away.
Yeah. Yeah. You're unfortunately you have to get more creative, and it's tough to young. Like, what's the advice to give young people here? Just avoid these industries?
The advice is don't let your first job be grunt work. And I know that's like really difficult because by definition, almost most entry-level jobs are. Do something else.
Yeah.
If you're going into a role that can be replaced by a computer, then it will. And don't do that.
Yeah. Disappointing though. All right, let's talk about crypto.
Hard to hear though, as I picked up Kobe from camp this weekend, I drove by my alma mater, Nassau Community College. What the hell did I know? What do kids know as 22-year-olds? Like it sucks.
Yeah. No, and I told you I've been having more conversations with students lately. I think they're all kind of reaching out to kind of like people see this coming. The young people see this coming, obviously.
Yeah.
And one of the kids was asking me like, you talk about how like being creative and communicating is such an important skill. And I think you kind of it's hard to overrate confidence too in a lot of areas, whether it's real or you're faking it. But this kid was like, how do I learn this stuff though? And unfortunately, some of it is you learn by experience. That's the hard part. Like some of the stuff you just have to, you can't read it in a textbook and understand it.
Yeah.
You have to go through stuff and trial by fire.
All right. Let's talk crypto, Ben. I sold a third of my crypto position.
Okay.
And I started buying Bitcoin and Ether in the middle of 2020, but Bitcoin was like 10,000 a coin, maybe. I don't remember what Ether was at. And there was a lot of silliness going on, in my estimation, in the market and certainly in crypto. ETHZilla, for example, all the treasury companies that we've been talking about.
Okay, what's ETHZilla? I don't know what that
It
is.
doesn't matter. ETHZilla is a biotech company that is now a treasury, an Ether treasury company. This is much less of a bearish call on these assets because on the one hand, you see this behavior, you're like, this is so fucking dumb. For the people that don't like crypto, they see this and like, this makes no sense. What do you mean? Companies' only purpose for existing is to buy ETH? Like that's what we're doing now? At the same time, there is a race to purchase these assets, and it's bizarre. It is a bizarre thing where there is a finite number of these things, of these tokens. Now, I know there's a bazillion other ones, but for the ones that people want, at least for now, there is a race. There is a small number of sellers relative to the number of people that are buying it, hence the run-up in price. But for me, it just became too big. It outgrew my comfort level of how much of my liquid net worth
It's a
was in these
rebalancing thing,
things.
right? That was the same exact thought process I had. How do you feel about now that you've done it?
Good. Yeah. No regrets. What was that bad tattoo?
So a few people asked me if I regretted, I think I sold it 100, if I regretted it. I really don't. Like, oh, I could have squeezed out a little more juice and maybe it goes to 150 but I still have a decent size. And from what I started at to where it is now, like you said, as a percentage of net worth, it was just getting too high, and I needed to rebalance my personal balance sheet.
Yeah, no, wherever it goes from here, whether it goes back down to 60 or up to 190, I'm good. I'm good. I feel good. I feel good.
So I was looking at from the peak in 2021, whenever that was, like the meme stock stuff, and then crypto crashed, and Bitcoin fell 80%, and ETH, I think Bitcoin might have fallen 77%, whatever, and ETH fell 80%. Since then, Bitcoin is essentially double. Even after, if you start from the peak of the last time, right? Bitcoin has doubled. Ethereum essentially went nowhere. And it's just now coming back to those levels again.
What a run. By the way, I mentioned this earlier on the podcast a couple of months ago. At the bottom in April, I remember being on the baseball field, and I said this at the time, that I had to unfollow a guy that I respect, whose opinion I respect, because he almost scared me out of selling a decent amount of my crypto. I almost sold half of it.
Didn't he say he was going to go to 5,000?
He said Bitcoin was going to go to 10,000. And I don't know what I would have been feeling lots of regrets if I sold the lows in April.
Here's the question.
Bitcoin was 70,000 and ETH was 1,500 or whatever.
What are you going to do with the proceeds of your sale?
I'm sitting in cash right now. I mean, I'm buying a house and.
Okay. Yes.
I don't mind. I'm very comfortable in 4%. Anyway, so this week's Michael Saylor tweeted.
But no, wait, I think if you have, obviously rebalancing into other assets is easy to do. But if you have an actual physical world thing that you can take the money and do something with, that's the stuff you never regret.
Yeah.
Right? If you said, I'm going to take some of these proceeds and I'm going to use it to do whatever to my house and make the move easier, and that's something that okay, fine.
Yeah.
That
it's
makes
incredible.
Your financial life easier.
The most money that I've ever made on any asset is something that honestly, I don't believe in Bitcoin and crypto. Like I'm not like a crypto dude. Like,
yes.
But I guess it's ironic. So Saylor tweeted that they bought 629,000 Bitcoin that they bought for $46 billion. They bought it for $46 billion. That's how much they spent. Investors with all the convertible offerings have given them $46 billion that they've spent. That's my interpretation of this. And so it is wild. What was
Maybe
I going
it's been
to
written
say?
about before, but I would love to hear who are the people who are investing in the convertible notes? Like who's funding it?
Well, last week we have Tom on TCAF this week, so we're going to talk about this. Some of his early investors, it's Peter and Bitmine Emerging Technology. It's Peter Thiel, it's Druckenmiller. It is the smart money. Like these are not dummies. They're the opposite of dummies.
Yeah.
And I don't think that this is like leverage. My interpretation could be wrong. So like the idea that like Saylor's going to get a margin call, I think it would have to go like way lower. Oh, here's what I was going to say. All right. So again, the limited demand, the limited supply, the ton of demand, all of that is well and good and true. And, who knows when that's going to end. It seems to be true for the foreseeable future. But it's still a risk asset. And the VIX is at 14. And there's been nothing in the market. Right? And like Bitcoin is still a risk asset. I don't care what anyone says. It will go down.
Right. If the AI trade unwinds and tech stocks fall, Bitcoin will get hit too.
Yeah, more.
Yes, right, exactly. All right, Bloomberg had this big piece about how Americans are getting priced out of real estate and home ownership, and they looked at this a lot of these big metro areas in the costs of rent or buy in 2021 versus now.
So
And they said it was
this is part of the story that like I'm just how many we do this every single week. Can the Fed please cut already so we can get on with it? And we've got Jackson Hole this week, and people are like, oh, we've got stocks at all-time highs, valuations at all-time highs, Chamath is back, we've got crypto, and we're going to cut rates. The only thing that matters is the housing market.
right.
And we're about to talk about it, but like, aren't you sick of, we do this every single week. We've been doing this for the last 3 years. Aren't you over it? Yeah, we know people aren't moving. Houses are too expensive. The amount of money that you're spending as a percent of your income, I can't do it anymore. I have nothing else to say.
Here's the dichotomy that's interesting to me, though. So this is from John Burns, and they show that since 2023, rent households have surged by 1.6 million. So you had like zero rent growth from 2017 to early 2023, and now the increase in rental units has gone vertical, which makes sense. People are looking at these numbers and going, "Why would I buy when it's so much cheaper to rent?" But the thing that people aren't doing is moving. So this chart shows that the total percentages of American moving in the mid 90s was 17, 18%, and now it's 8%, and it keeps going down. So this is the interesting part of it, that there are obviously places where it doesn't make sense to buy a home, and it's way too expensive, and some people are never going to be able to afford to do it. But they're not moving away to find cheaper housing. So people care about housing. It's a huge issue, but they don't care enough to move and find cheaper housing somewhere else. That's an interesting dichotomy to me, that it hasn't caused more people to move yet. They've just said, fine, I'll just rent instead of move. And I understand why, but it's interesting that I don't understand why the total percentage of moving people, why is that going down?
Well,
so much?
I think it's because remote work is a huge part of this.
That's part of it. That makes sense.
And moving
but this trend
sucks.
was already
this
trend was already well in motion.
Yeah, it was. I think moving is there anything more disruptive? Now listen, if you're a young person and you have the ability to hop around and experience the world or the country, amazing. But uprooting your family, moving away, and another part of this is the dual income households, right? Like now that both people work, you are much more reliant on friends and family to help.
That's true. It's harder to uproot for a job because
you can't do it. It's impossible.
It's just interesting to me that hasn't been an outcome of this. People haven't decided, listen, I'm moving. Screw New York, it's too expensive. Or San Francisco, I'm moving to Iowa. It's cheaper there.
Imagine you had to move out of state.
It'd be impossible, right?
Yeah.
Yeah, it'd be tough. All right, I want to talk about $1 million houses. This is one of the things you said. We keep talking about this. This is one of the things I still can't wrap my head around. So we had 2 houses listed in our neighborhood. You've been in my neighborhood before. There's 20, 25 houses. 2 houses listed last week for some reason. I don't know why. One of the houses, the people moved in 2023. They fixed up the house and now they're moving out already, which sounds awful to me. You go through this whole rent, and I don't know why. I didn't know them, but both of these houses are listed for more than $1 million in my neighborhood. Okay? Like a decent amount over $1 million. And when this neighborhood was built in the 2010s-ish, mid 2010s, and these houses were nowhere close to $1 million when they were built, right? My house wasn't anywhere close to that number when we bought it. I just think it's weird wrapping your head around the fact that $1 million is starting to become more normal for the price of a house, even in an area like West Michigan, which is crazy to me.
Does this bleed into the stock market a little bit? Like the median stock used to trade for 16 times. Well, okay. Well, guess what? Now there's too much money. There's too much money, and now it's 20 times. Get over it.
Well, I had a friend tell me this week. He said the price of a new boat is now what a starter home used to cost like 7 years ago. And I thought about it.
And that's just what it is.
It's true. And the funny thing is when these houses listed, my wife is like, "Well, they're listing for that," and I'm like, "Listen, no, this is the new level now, right? You're right. Maybe the average Cape was 18 in the past. Now it's 25.
Yeah, get
used to it. But Redfin had this report where they looked at
one of the zillion differences is that stocks should be tethered to like their cash flows and their fundamentals. If you're buying a business, I'll pay Yeah, I'll pay 13 times for this business. I won't pay 20 times. I won't make any money. But in the world today where everybody is a millionaire, and I know not everybody's a millionaire, so that sounds ridiculous. But you
More
understand the
people
point.
are.
When there are, how many millionaires are there? There's like competition for stocks. It sounds like the dumbest thing ever,
So
but it's true.
The number I found, I think from Redfin, said 9 to 10% of homes are now worth $1 million or more. So 1 out of every 10 houses is worth $1 million or more in the country. And so you just have to get used to it.
So this is the inflation.
But wait, how about this? Housing is just like Bitcoin with a supply. There's a constrained supply. There's more demand. Like housing is just like Bitcoin.
Yeah.
In a lot of ways, right? To the moon. All right, this is interesting. One more from Yardeni. He looked at the value of household real estate and then the equity and then how much people have borrowed. And look at the bottom line. That red line is home mortgages has essentially gone nowhere as the prices of an equity have gone crazy because everyone was able to, it's gone up a little bit, but
wow,
this will never happen again. Ever. This is a one-time thing for all of human history. Never going to happen again. Where we see something like this.
Wow. Wow, Ben.
Let's talk about things that people have very strong opinions on with no nuance whatsoever. Okay?
Okay.
I did a few things on social media this week, and here's one of them. A guy last week on Ask the Compound asked if he should buy a Porsche.
Yes,
he said,
the answer is yes.
I'm a millionaire next door. My wife and kids think we're middle class, but I'm sick. I've saved my whole life. I want to buy a Porsche. And I put this out on Twitter, and I said, "What should this guy do?"
Buy a Porsche. You're gonna die. Enjoy yourself.
That was one extreme answer. The other extreme was,
how is that extreme? That is a fact. At some point, you will no longer be on this planet, and it could be tomorrow, and you should enjoy yourself. That is not extreme.
And that's where I fall too. A lot of people say, and a lot of people said, no, this is a depreciating asset. It's ridiculous.
Oh my God.
But those are the two extremes.
Listen.
I'm on your side. Trust me.
Some people have that mindset. Everybody, you're not going to change anybody's opinion. If you think that a Porsche is a depreciating asset, then you are living with a different worldview than I am, and that's fine. That's what makes the world go around, I suppose.
One more thing, and this is maybe like the availability bias or something. But we talked last week about how we're also so over. Maybe this whole podcast now is just over stuff we keep talking about. But we're so over the young people are so depressed and not that we're like poo-pooing it, because obviously these things are real. Social media and the internet, like young people didn't have a chance in a lot of ways. But I was listening to I think it was Derek Thompson at a podcast, and he interviewed the author of those charts, and they were talking about how lonely and miserable all these young people are, and all the data shows this, and it backs it up. And I
don't believe it. I'm sorry. Everybody's depressed.
So I go to the gym, and at the Planet Fitness I work out at.
Surveys are broken. We keep saying this. It's surveys. Is everybody miserable?
At the gym I work out at, right by my office, it's in the summer, I think it's free memberships for high school and college students, which is kind of cool. And every time I go in there, I see 3 or 4 bros over here lifting weights with each other, and 3 or 4 bros over here, then 3 ladies on the treadmill on the incline. Everyone does the incline walk now. That's the hot exercise these days. Like if you walk on a treadmill, you can't just walk. It has to be on an incline.
Yeah.
And they're talking and they're laughing.
Get up.
And they're working out together. And maybe this is, well, the people who go to the gym are different, but I just think it's okay to hold 2 opinions in your, like, social media is having an impact on the way people perceive themselves. I also think young people now are almost all bipolar. They have an online persona and a physical world persona. And they're 2 completely different people. We've mentioned this before.
Yeah.
There's a lot of
we've met people like this, where people on the internet that have a personality.
Yes.
And then you meet them physically and you're like, wait, what?
Yes, you're nothing like I thought you would be in real life.
So which is the real you? I think it's easier to fake who you are in person, but maybe it's both. Maybe it's a Jekyll and Hyde type of thing. Howard Stern plays a character on the radio. Like, that's not his real personality off air. But I do think that the social media dual personalities has broken everything. And I choose to focus on, no, the world isn't like ending. Everybody's depressed. I just don't buy that. I'm, obviously there's some of that for sure, but it's exhausting. It's enough.
It is. All right. One more. There's too much money chart for you. Ed Yardeni has assets held in IRAs, and this thing is going to the moon. It's at $17 trillion now. I think it was at 11 heading into the pandemic. And this thing is just going to keep going up because of baby boomers rolling over 401ks and IRAs. But this is where the deregulation stuff is going to come in big time, where I think people were at least a little boxed in with their 401k assets in terms of what you could invest in, right? It was just pretty run-of-the-mill mutual funds, most of the, sure, some of them were overcharged, actively managed mutual funds that had high fees and such. But once this money gets into the IRAs,
Game on.
then it's kind of like it's wild, wild west.
Yeah.
Obviously, most of this money is going to financial advisors. Let's be honest.
Yeah.
But a lot of this is going to be, you're right, the trum for the sharks, essentially.
Yeah.
It's a lot of money, though.
All right, another big week for streaming. Apparently, YouTube is trying to get the rights to host the Academy Awards.
Like YouTube TV?
Like YouTube.
Really? Okay.
YouTube. I don't know if it's YouTube TV. I assume it's just YouTube.
I guess it makes sense. Why not, right? My kids watch more YouTube than TV. I have to tell them, stop watching YouTube. Watch
Disney.
a streamer. Yes, watch Disney. And
it's the only thing I say no to, like no YouTube. Watch Disney.
To them, YouTube is TV, though. It's bizarre.
All right, so this is from Lucas Shaw over at Bloomberg. Happy Gilmore 2 delivered the biggest opening weekend ever for a streaming movie, which I guess is not that surprising. Quality notwithstanding.
Yeah.
It generated,
as the number of people continue to grow, these numbers are going to get bigger.
But also, like, who didn't watch at least a little bit?
Yeah, I watched. Everyone was at least.
I contributed 15 minutes of the 2.9 billion minutes of viewing the week it debuted.
I would love to see how many people will ever go back for more.
0. So 24 million people watched it.
Okay. And how many subscribers does Netflix have?
Is it?
Do we know?
350, 400 million?
Okay.
I don't know. I'm sure you could Google that very quickly. Okay.
I don't go to Google anymore, man. I use ChatGPT. 300 million.
Okay.
That's a decent amount. All right. We do have to mention future-proof signups. They keep giving us updates on Slack for future-proof. The signups are happening. Like, if you don't sign up soon, you're not going to go.
All-time high.
Yes,
but it's interesting how many of the attendees end up signing up last minute. And yeah, we're at all-time highs. It's going to be.
I think the last week was like we're like breaking records for the number of people signing up. So like we're already. Yes, we're already close.
Oh, we've got some Exhibit A swag. I'm excited. I'm going to be rocking the Exhibit A bucket hat. I think we made 100 of them.
All right. I had a friend wearing a bucket hat this weekend, and I can never tell if people are doing it ironically or
I'm not doing it ironically.
You're doing it just for sun. I understand that. Yeah. You're a bald.
But I don't. Why do you think they look bad?
I think if you're wearing a bucket hat and Crocs, you've given up on life. Let's just be honest.
I do wear a bucket hat with sandals with socks on, not Crocs, but
my kids wear sandals and socks. Apparently, that used to be like that. That was a sign of like you're a dork, and now it's like it's a thing.
Well, let me tell you why I wear my sandals and my socks, and it's not for a fashion statement. Actually, this brings me to another point. I'm glad you mentioned this. So the sandals that I wear, they're like one of those ones with like the big sole at the bottom. So they kind of, you feel like sneakers. It doesn't feel like you're hitting the ground. But they sort of cut my foot when I'm walking with them. That's why I wear socks. I don't do it because I think it's like looks good or anything. It just
time to buy a new pair of sandals, man.
No, but they're very comfortable with socks on. All right. I think my feet are broken. Speaking of like getting cut by my sandals. Unless, all right, growing up,
That's because your second toe is as big as a middle finger.
I do have a very large toe. Growing up, I was never able to have a pair of Jordans. They were too expensive. I had a $60 hard cap on what
I was in the same boat.
On what I was able to buy. So now that I am an adult and I'm able to buy Jordans, I buy Jordans. And I hate all of them. And I just bought another pair.
Why do you hate them?
Because they all fucking cut my feet. They all cut my heels. And not only do they cut my heels, they're not comfortable. Jordans suck. I probably have 8 pairs of them and they all suck. I love how they look. I love that I'm able to buy them.
You know what? Now that you mention it, I have a handful of pairs of Jordans too. You're right. They're really not that comfortable.
No. They're worse than not that comfortable. They are actively uncomfortable. every time I come home, either my heels are cut or they're squeezing my feet and I have to like rip them off. I'm like, oh, am I going to stop wearing them? Probably not.
So you just need to like hang them on your wall or something as a piece of art.
But I think I've bought my last pair.
Okay. I bought a pair of Jordans this week. My wife's going to.
Which ones?
She makes fun. I don't know. She makes fun of me. I like all the ones that look like they're from the 90s, essentially.
Okay.
Which I guess they mostly do. Okay. I have to give a tribute here really quick. When I was growing up, I never had like, people tell the stories of like, I had a teacher who changed my life or a professor in college who changed my life. I never had that once. I never had a teacher who like, no offense to any of my teachers growing up, but no one like had a big impact on me that I had like a close relationship with or that like changed my life. For me, it was always coaches. And so I think last week or 2 weeks ago, my high school football coach passed away. He was 85. RIP Larry Sellers is his name. Same name as the guy from Big Lebowski, right? But he was one of the
Do you see what happens, Larry?
Yeah, he was one of the winningest coaches in Michigan high school football history. And he wouldn't make it today in today's world as a coach. He was a throwback. Like he broke a clipboard over someone's head. There was a he was one of the there was a in our school. Remember in school when a visitor would come into school, you'd have to sign into the office. Like if you're a visitor coming to see someone, like you can't just come into a school. And some kid came to our school to visit a friend, and in the cafeteria, and we had a small school, so he goes, "Hey, who are you? Did you sign in at the office? Where's your pat?" And the kid said, "Oh, scram, old man," and he grabbed the kid by the throat and threw him against the wall. This is the kind of guy he was. He wouldn't, but he was like hard in all the good ways and like pushed you. Like I think there's so many good things I learned from sports, and he was one of the reasons why. And he always said that like character is who you are when no one else is looking.
Yes.
Like I still remember all the stuff that he said, and he would say like, practice doesn't make perfect. Perfect practice makes perfect. And so I learned so much from him in terms of hard work and stuff. So he was like the teacher that changed my life. So R.I.P. Larry Sellers.
Kids need role models, and in the future it's gonna be ChatGPT. JK.
Probably.
Okay.
Yes, but Larry would get canceled today, unfortunately.
Can I say one more thing about getting canceled?
Yes.
So I told you this yesterday. I called you. I'm listening to another audiobook. Actually, all right. So I got this app that somebody recommended. The app is called Libby. And I downloaded The Stand. I'm a big Stephen King fan. I've read a lot of his books.
Oh, Libby is the one where you can rent.
Yeah, you can rent from the library. Okay. One of his books that I never read was The Stand. And I had the physical copy. And I think I had the original one, which is 800 pages. I rented the longer one. He like redid it. It's 1,200 pages. And I got to be honest. I listened to, I don't know, 11 hours. I was a quarter of the way done with it. It was very difficult to keep up with. There are so many different. You ever read The Stand?
No, for some reason I've never read any Stephen King, which is probably a hole in my reading material. Yeah, I don't know why.
Okay. Anyway, there are like 15 different main characters, and it is so confusing. Maybe that's.
I remember watching the TV miniseries back in the day. I watched it.
And then it got ripped away from me because, like, I guess you only have it for a limited amount of time. So I rented it again, but I have to like wait for it to be delivered. I don't know how
listen to it on like 2x speed?
Yeah.
Okay.
So anyway, I feel like I'm pot committed at this point. So in the meantime, while I wait for it to get like delivered back to me, I don't know why audiobooks can't just be delivered automatically, but I don't have it right now. So I downloaded another book, Jailblazers. Listen to this one on Spotify. And Jailblazers is about the Portland Trailblazers. And if you're a sports fan, you remember this team very well. And it starts early. And
they should have won a title. They should have beat the Lakers that one year.
Well, they were up. Yeah, they were. So the lob, the Kobe to the Shaq lob, that was game 7. They were down 13. The Lakers were down 13 going to the 4th. And that team had Scottie Pippen and Bonzi Wells. But the earlier team had like Isaiah Ryder and Rasheed Wallace and Kenny Anderson and Gary Trent and like a lot of guys that had a long rap sheet of arrests.
Big personalities.
Yeah. And anyway, this would not happen today. This is pre-cancel culture where the person who's narrating the book, whoever's reading the book, when he gives quotes from the players, he puts on a certain affect to do each of their voices. And it's absolutely wild. I can't believe that he's talking with their affect. And each one is different.
Do you think he like studied the players' voices?
I do, because when he does PJ Carlissimo, who has like a gruff, like a barky sort of voice, that's what he sounds like. But it took me aback.
Okay. Good call on the best movie year ever. I started reading that one. It's very good.
That was a fun one.
All right. My recommendation this week is Platonic on on HBO. No, what is it?
What is
It's on
Platonic?
Apple.
Sounds like a
So
Ben show.
it's the Seth Rogen Rose Byrne show. It came. I thought it was just a 1-season show. It's a perfect middle-aged show. So it's they were best friends in college. They never had a romantic interest. Seth Rogen and Rose Byrne. They have great chemistry because of Neighbors that they did together, and it's so funny. It's about parenting, and it's about trying to still have friendships in middle age when you have a job and you have kids and you have all these responsibilities. And the season 2 just started, and it's hilarious. It's
That's
like
fine. That I will watch with my wife. I never heard of that
that's
show.
a perfect wife. My wife cracks up at everything Rose Byrne does, and she's really, really funny. And I just thank them for like I thank Seth Rogen for keeping comedies going.
Okay, I'll watch it.
It's very good, and it's a very easy, light show. So I watched Jurassic World. My son saw it in the theater with my wife a couple weeks ago, and then we bought it on demand or whatever on Apple. And I lost interest like immediately. It's just like they're trying to make it like Jaws, I guess, because they're chasing these animals. Here's my idea for how they can continue. Because
Wait, hold on. Did you finish the movie?
I didn't yet.
Okay.
I'm halfway through. It's like, well, I'll finish it, but I wasn't like really into it. Here's my idea for how they can save this series if they want to keep it going. The one thing that they haven't, and I thought the thing they nailed was after dinosaurs have been here for 30 years, people kind of lost interest. Like, whatever. Yeah. I thought that was pretty good. But what they didn't get is, how they have all the stories now about Disney adults, like Michael Antonelli. Like Disney adults are like this crazy group of people.
Do you mean Dad in the Bay?
The thing they haven't leaned into is the comedy aspect. They could make the next Jurassic World a dark comedy about like the adults who are way too into dinosaurs.
They'll never do that though, because
they could do it like Shaun of the Dead.
They need a general audience.
Yeah, I know. They need like a show, but they need to spruce it up. All right, finally.
Wait, hold on. I have something in Jurassic World. So I rented it for Kobe because he's been dying to see it. I watched it 2 nights ago, and it was much more palatable the second time because my heart was already broken in the theaters when I saw it. Kobe loved it, not surprisingly. But last night we went to rent Superman, and I think Jurassic World I rented for $20 and Superman was $25. And I asked him for some to contribute. I said, Kobe, I spent $20 last night on Jurassic World. Superman is $25. Do you want to spend $25 on Superman, or do you want to wait until it comes out on HBO Max? And Robert goes, what are you doing? She's like, would you make him give you money, take him to the theater? She's like, and then I was like, get a butt out. It's none of your business. And then she found out that I only rented because Logan wanted to watch Jurassic World.
Oh, instead of buying it?
So I'm not renting it again. And she goes, hold on, you rented it for $20. You didn't buy it for $25?
That's what I did. I bought it because it was $25. Okay.
But I didn't want to buy it. It didn't even occur to me. How many times are we going to watch this movie?
Right.
Anyway. Yeah. All right, what else?
It is funny. I always do that with my kids too. Like every once in a while, you have to make them feel the pain of open up that piggy bank.
Yeah, I'm like trying to teach them about money.
Yes.
Meanwhile, Robin gave him $150 for when he got home because she said that she was going to give him money for every picture that he smiled in at camp. So when he came home, there was like toys and stuff in his bed and three $50 bills. And when I saw, I said, "What are you doing? Why is he getting $150? Are you kidding me?"
That is a boy's rite of passage, not smiling in pictures. That's just something almost all boys do.
Yeah.
I was served up Road Trip on Netflix last weekend, and I watched it, and man, do we really miss 90-minute comedies.
That's a great movie.
I forgot it was Todd Phillips, too. And so I looked at this. So Sean William Scott, the Stifler guy, he did American Pie in 1999, and he immediately did Road Trip the next year. And then American Pie 2 was in 2001. And he essentially plays the same character, just a lighter version of Stifler. And whatever, it's an overtop, raunchy comedy, but this kind of movie we don't have anymore. But he had a pretty good movie career, actually, Stifler. So he had the American Pie movies. He did Road Trip.
He was in the one with the rock stunk.
I like that one. The Rundown?
Yeah,
I kind of like that one.
It was okay.
He was in Final Destination. He was in Old School.
Oh, that's right.
Role models.
Right. You have a dart in your neck.
Role Models with Paul Rudd wasn't bad.
No, hold on. Role Models was great.
I like that movie.
Okay.
Goon, the hockey one. I don't know if you ever saw that, where he plays an enforcer in like a IHL hockey league. So he actually had a pretty good movie career, surprisingly, from just that one role. Anyway, yeah, good stuff. Road Trip. I mean, in the late 90s, early 2000s, which is right when I was in high school, college years, it was the greatest run ever of teen stuff in movies. It was amazing. We just
Yeah,
don't have
dude.
that anymore.
We got it.
All right. Sign up for Future Proof. If you don't now, it's you're never going to be able. We had one friend who said, "Listen, Blues Traveler put me over the top. I'm coming." Right? Exhibitaforadvice.com for all your charting needs. What else? You on Talking Wealth this week?
I'm on Talking Wealth. Yeah, we're talking to Caleb about Y charts actually.
Oh, good. And I have Carl Richards on Thursday.
Oh, hell yeah.
Which
Oh,
is
you know
great.
what? You know what? Somebody emailed us asking, getting back to like us not mentioning the other shows enough. Somebody emailed us about if we could talk to Wes Gray about the 351 exchange. And I wrote back. I spoke to him last week. So if you're an advisor, we are doing these shows. We'll put the link in the show notes. But yeah, we're doing industry stuff. So check it out.
What's our email? Animalspirits@thecompoundnews.com. See you next time.